Welcome to Bitcoin Escape Plan. The topic of today's video is, will Bitcoin ever beat gold? And I'm going to talk about, I think, one of the more interesting parts of that narrative and something that I haven't heard anyone else speaking about, of the next major transition from gold into Bitcoin and when that occurs. Something we're definitely going to want to check out. Normally I start off these videos with a 4-hour analysis of Bitcoin, but before I do that, I'm going to go over real quick and remind you to check out the newsletter. You can subscribe. You'll see today's newsletter once I'm done recording this video. This is where I go over in more depth this actual concept. And then today I'm going to be going over the market cap of Bitcoin and gold and kind of the broader transition of how this number will continue to go higher, as well as this number continuing to go higher. A lot of people have that confused, that they think gold is going to go down and Bitcoin is going to go up. I don't think that that's the case. And then I'll do a more in-depth analysis of gold and the US housing market and stock market during the last major crash in the recession, and kind of give that as a broad picture assessment of where we think price is going to move once it's at the end of this gold cycle. So before I get into all that, let's go back to Bitcoin real quick. So over to Bitcoin on the 4-hour, we've just been consolidating for most of the week so far. Haven't really gone anywhere interesting. Like I said in Monday's newsletter, 96K is really all that we need to actually focus on. And besides that, we are still well below. If we take a look, I wasn't even on the 4-hour. Here we go. Here's the 4-hour. So over here, this is the anchored VWAP. Talked about that a million times, 95.6K. At the moment, it is still sloping upward. It was 95.5 the last time we talked about it. Price is still well below that. It's still going to register as a failure in the short term, which is going to continue pushing us down. Right now, this Fibonacci pivot, 89.97. So let's call it 80, really just 90 essentially, is where price is actually consolidating around, a little bit above that, 90 and 90.2. So while we're still failing the 4-hour SMA, which we've been doing since Wednesday, I would imagine we're going to continue to get pushed towards this 89K fib pivot. We may break it if we register this as significant enough of a failure to no longer want to make another push for 96. I've said the same thing a bunch of times before I get into the rest of the video. I would expect we're going to chop here and here until March. I've made a bunch of other videos about that. You can go check out those videos. Now let's get into the actual topic, which is gold. So gold, I think, is really misunderstood. People talk about, needing to be like gold is going to bleed against Bitcoin, and it's, gold is a dead asset or whatever. I think that those people are incorrect. I think that they misunderstand that this number, when people first started saying that Bitcoin is going to get to like 10% of gold's market cap was below 10 trillion at that time, and Bitcoin was below 1 trillion at that time. It's now 5.7% of the total market cap of gold. And it's going, I think, as Bitcoin continues to go down in value now, gold is going to continue to rise in value until gold hits its own kind of stopping point, which we don't know where that is yet, 40 trillion, 50 trillion. We don't really know where the demand actually will kind of cap out before it needs to go through its full cycle. But Bitcoin won't see the large capital appreciation of that right now. It'll be over the course of the next 4 years, which is something we're going to talk about as we go into the video in more depth. So first, let's start off with gold during that time period, and then I'm going to show you what was happening in stock market and real estate. But the first thing that we really needed to keep in mind was gold peaked. And for a brief history lesson, I talk about this, in a number of different videos, but brief history for gold real quick. Gold is taken off the gold standard by Nixon in the US in 1971. It's made legal again for US citizens in 1974. It has a sell-off event based on that, and then it runs hard into 1980, and then it's boring literally until 2006. 2006 is the first time where we start to see closes at the highs in 1980, and that is what kind of allows us to hit a new bull market. We'll go into the more timely where we are now in that cycle, but I want you to broadly understand that that's how it moves. Is it'll run for a long time, it'll find wherever it's going to top, it'll start to peter out, and then it'll be boring for a really long period of time. I'm not really expecting a 26-year long lack of gold momentum at the moment, but we have to keep that in context that it can do that. It can be boring for a decade or more. There are a number of economic factors that were causing that I don't think will be replicated, but just important to note. So 2006 is really when we have permission from gold that it can run again. And this is very important because if we go to stock market and real estate, a lot of people will say this, where like they didn't see 2008 coming, but that just means you weren't looking at your TradingView chart. Like that's the only thing that means, because you can see pretty clearly here that real estate market tops in 2007, right around here, April of 2007. March of 2007 essentially is the peak before the value of homes starts dropping off a cliff. And same thing for stock market. So this is May. We see a double peak similar to the 2021 one for Bitcoin. And this is October, and it continues to go down from that point. Now, for stocks in particular, it bottoms out by 2009, and then it starts to recover. For real estate, it doesn't bottom really until 2011, 2012. So it takes about 4 to 5 years for real estate to fully bottom before it starts to recover. And it took about 2 years for stocks to bottom, and essentially roughly 4 years for it to recover. To actually recover the highs took closer to 6 years from the actual drop, but I guess that is 4 years from where the bottom was. So about a 4 to 6 year process, whereas real estate took a lot longer. Real estate took all the way until 2016 to recover from where 2007 was, which is considerably longer than stocks. What is that, 8 years? Terrible at math. So that's the broader context of that Great Recession. Now let's zoom into what's actually happening today and why it's relevant. So this chart does not touch the monthly SMA very often. Unfortunately, it only goes back to about 1991, so I can't see older data than that. But it only happens once where it actually crosses below, and that's what caused that very, very long period of time where it was boring, like 8 years where it was boring. So we've had 2 instances in this business cycle where it made an earnest move towards the moving average. In 2022, when all of crypto was exploding, FTX and everything else, a lot of traditional finance was struggling at that time as well. There's kind of like a major reset around that time. That's the first time we stopped the slow and steady climb of the prices of U.S. homes. Otherwise, you can see it's pretty sharp up and to the right that whole time period prior to that. And then the only other real instance where we have a sharp decline was last year. And I was talking about this last year that I was watching this. I was expecting this to continue to go down and to touch the moving average, but it does look like we have recovered a bit since then. We're right around back to the February through March highs of last year right now. So we just want to continue to monitor this trend. The SMA is starting to flatten out. Not quite flatten, but at least it's not as sharp an angle now. So that's really what we're looking for real estate is whenever we interact with that SMA, it's going to continue to bleed for a long time, for several years. It'll take as many as 8 to 10 years to recover from these highs here, meaning we should expect it to drop precipitously whenever it does actually top out, which that's the factor we don't know. There's some evidence that points at 2026 being a top for both stocks and real estate, but we don't actually have enough evidence right now to verify that that's true. Real estate at the moment, or stock market at the moment rather, sitting at new highs and continuing to push new highs. Nothing really preventing it from going here by the end of the year. and potentially higher if it has another sincere parabolic push. My baseline assessment for what I think is going to happen for SPY is probably we'll see a minor peak by if we show strength here, we'll see a minor peak by the end of Q1, which will likely sell off right around tax season. And then there'll be some consolidation in this range. And then I would expect another peak in the summer to start. And then I think, based on the other analysis that I had done for the, I forget exactly which part, for the like sharper decline for stocks, it happened kind of all at once. A lot of these happen over a shorter time period, but some of these ones are more violent. 2020 was more violent. Even the 2022 one was slightly more violent. And we're up a lot at the moment. So I'm kind of expecting us to drop back to like here at some point during the year. I don't know if that is towards the end of the year, but I would imagine over the course of the next couple of months, we're going to punch through 698 and make a move in earnest for 748, but possibly not quite reach it, then consolidate a little bit back towards the 700 level before another sincere push for 748, 750. And then it's just a matter of whether or not we have enough gas from the summer into Q4 to actually get here, or whether we're just stuck somewhere here by the end of the year before it has a major sell-off at the end of the year, which my baseline assumption is that Bitcoin and stocks will bottom around the same time between October and December. I just think it'll be more sharp for stocks, whereas Bitcoin, it's probably going to be like drawn out over that whole time period. It'll seem more violent for stocks, whereas Bitcoin, it'll be a little bit easier to see coming. So what does that mean for gold at the moment? So gold at the moment is still ripping. And if we are going to assume that housing and stocks are going to peak at some point by the end of this year, then again, if we're extrapolating that to, so the peak for stocks and real estate was right around here. This is where gold really starts to begin to run. So it does, in fairness, it goes up and then it drops down. So that could be the likely scenario where we've seen the first leg and we may give back a bunch of that performance in gold, although it doesn't really look like it at the moment. It looks pretty parabolic relative to what it was doing then. Significantly more, to be honest, now than then. So there's a possibility that the swing to the bottom is more violent. I mean, we kind of have to look at this guy for that. This is really the one that's probably more relevant to now, where there's big jumps. But again, eventually it tops and then it begins to consolidate. So that's what we're going to be looking for, is what is going to cause that consolidation for gold. And I believe that that's going to be a proper real estate market top combined with a major stock market top, meaning if it's going to take another 4 to 6 years for SPY to actually retain its levels. So let's say that SPY tops right around here, right around 800 by the end of the year. It's then going to drop possibly as low as these levels, maybe even this a little bit lower to 450. But realistically, that's the one I would be looking at, about 480. If it does get to about 800, that it could drop to by about 2 years from then. So let's call it 2027 to 2028 would be the full expression of that move, where stocks are needing time to recover. You've heard a lot of people say that they expect the S&P 500 to underperform over the course of the next decade. That's what they're talking about, is it will likely experience a major drawdown in the first half of the decade and then spend the second half of the decade just trying to get back to those highs. If, again, we are to assume that this is the major peak, which we don't know. It's very possible that real estate just continues to chug along, that, I don't want to talk about this for a long period of time, but you've probably seen in the news recently how Trump is going to try and get institutions are no longer able to buy houses, which is great. And it sounds great on paper. And it is in a lot of ways, but really all that it's doing is changing who owns the house from BlackRock and Blackstone to JP Morgan Chase and Citi. So like if you're someone who gets a 50-year mortgage, that's the better course of your life. If you're rich, maybe you can, buy things that extend your life. But for the average person who now is going to see, lower home prices by the time that this move is done, I think that those people are going to be locked in for the rest of their life, thinking that it's a good thing. And all that changes is now the banks own the house again, like they did in 2008, instead of the major institutions owning them, which is very little difference. But that's kind of what we have to look for, is like, how much does that actually prop up the price versus too little too late. So once we interact with that SMA, we're dropping. And we're dropping for a long time. We just don't have any precedent otherwise. Again, unless it goes further back than 1991. And if you know that chart, please tell me. I would love to see that chart. So for gold, what we can kind of expect to happen is we're going to continue to rise until the bottom of that movement. So if we're to assume that it's going to take as many as 2 years for the stock market to properly bottom, that means from the end of 2026, where it's likely to have experienced its top and probably start being ready to bottom, that would be sometime in 2027, 2028 that we actually see the bottom for stocks before beginning to rise. And for real estate, probably closer to, say that it interacts later in the year before it starts sharply dropping, then we would expect about 4 to 5 years before it actually bottoms, 2029 to 2030, and then it'll start to recover. Probably not until like 2033 or 2034 would be when it would actually recover to whatever levels we reach, whether we reach right here or right here. It's kind of hard to know exactly, because again, we could kick the can down the road longer, and actually extend this business cycle longer naturally than it would due to the stable coins. It's quite possible, because they are just going to be able to print a ton of money once they switch the primary customer of U.S. debt is about to shift to anybody who uses stablecoins instead of just major governments or anyone who has like a significant amount of U.S. debt that has to buy some form of treasury or cash equivalent in order to service that debt. So that is going to affect the amount of liquidity for people to buy houses. And I really think it's just going to be like a last little attempt to jump the price higher before it starts to fail. 2007 looked a little bit different, where it we didn't see a major drop down. It was pretty steady, slow and steady the whole way. Now it's more volatile. Now we have actually seen 2022 was significant. And this is I would say this is probably the most significant one on the chart besides 2007. It did clearly start to recover from the July data, but we didn't really get that until, Q3, Q4 of last year anyways. So really, if we're to assume it's going to go similar to that, then we're probably just going to skirt around here for the rest of the year until we actually start failing towards the moving average. But again, this is something we're going to have to just watch over time. There's no guarantee that it's going to happen exactly the same way that it did in the last business cycle. But if we are to use that as our baseline assumption of what's going to happen, then gold is likely going to get, over the course of the year, It's also, like stocks, is going to have to push through this initial pivot that it's on, and it either runs right to the next one or it needs to consolidate for a while before it is ready to jump to the next one. And then by the end of the year, this is only a 27% move from here to there, potentially by the end of the year. And those fib pivots are new. Like those have only opened up as of the course of, I believe, this year. I don't think that those were up when I looked at this in December of last year. So that would be the broader progression that I would expect for it to experience over that time. I think for the most part, that covers what I want to talk about for the broad idea for stocks and real estate. So I'm actually going to switch this to the XAU Bitcoin chart to highlight that point. So, oh no, that's the wrong one. Where is XAU Bitcoin? There we go. So XAU Bitcoin in relation to gold, now that we're at this part of the video, like and subscribe. I definitely did not say that earlier. So as you can see, the broad movement and for anyone who is not familiar with this, this is XAU Bitcoin. This is the value of gold per Bitcoin. So it's a pretty clear trend. Since about 2010, 2011, the value of gold in terms of Bitcoin has dropped about 99%. It's minuscule at the moment. And it's really the bulk of that happened by this point. By about 2013, it was like already 97% of the value had been lost, essentially. And we've really just been in kind of like a consolidation trend since then, consolidating slightly lower than that. So there's a possibility that we continue to see an uptrend in the short term in terms of the value of gold per Bitcoin, but probably not in excess of about here. We don't really have enough evidence of it, but like it's not like it's going to lose another 99% in value. That's highly unlikely. It's more likely that it's going to consolidate and then just slowly lose value over time. More of the value will bleed into Bitcoin. But what I think is really interesting about that specifically is when we think about the context of what was happening here. So we just talked about this for the rest of the video. Real estate really doesn't start to recover until 2012. Stocks has already recovered by around then, but really it's just at the same highs as 2007. So during this time where gold has peaked by this point and has started to lose its value against everything starts to sell out of gold and go back into stocks and real estate. And that's also the major inflection point for when that was the last little gasp of value of gold per Bitcoin before it also dropped off a cliff. And by the time that the full progression had happened for stocks and real estate, all of that value had accrued in Bitcoin instead of in gold and continues to do so. So I talked briefly about how I believe that the value of, do what I ask you to. Oh my God. The value of gold, I think it's just going to continue to go up over time. I don't think that it's like randomly going to hit a cliff and then no one's going to use it anymore. I do think broadly, if we're to take this as it's going to continue to run until the local bottoms for the stock and real estate market, that means potentially that gold is going to run for another several years. If we're to assume that 2006 is the top for stocks and it takes roughly 2 years for it to bottom and another 2 years for it to recover higher, we're talking about 2030. Although gold does seem to like stocks will start to run even when gold is still running, whereas it's more of a reciprocal nature with real estate in particular, where real estate will continue to go down, and then once it starts to go up, it'll be very noticeable for gold. So this really depends. Gold will run until stock or real estate market has bottomed. So if we kick out when the real estate market has bottomed by another year or two, then that extends the amount of time for, and I don't even mean the bottom for real estate. I mean once it starts, once it actually interacts with the moving average and heads in that direction, which it still has not. So we have every reason to believe that gold is going to run for another couple years, at least until 2029, possibly 2030. Again, depending on how long that actual expression takes and whether this movement was too parabolic. There's a possibility that this was like such a parabolic trend that just like in 1980, it's going to need to like really cool down for an extended period of time. But I think because of the narrative, specifically with China and Russia and a number of other countries reducing their demand on the dollar, it's going to push gold higher during that time period. That's a strong narrative in favor of gold continue to go up, because if governments don't have to hold U.S. debt or dollar denominated debt, then they can move into assets like gold or oil, or even as U.S. stocks get tokenized, it'll be easier for foreign entities to also be able to trade that the same way that they do Forex. So a lot of money is about to flow into tokenized stocks instead of just stocks themselves, all of which will eventually come out of gold. I just don't think that it fully comes out of gold until the 2030s. And then that's probably going to be a bad decade for gold, I would imagine. Most of the value will bleed that from that run will bleed out until, if we're using the older semblance as kind of like an assumption, then it'll likely not drop below around here. Like if we use this as the example, this is the peak in 1980, and it took until 2006 to recover, but then we stayed well above that. So I'm kind of assuming that it's going to be this guy, 2011 peak, which is like 1900-ish, 1920, I believe. And I would assume the same baseline for what's going to happen with gold over the course of this extended bull run is will bottom somewhere above that. So let's just use 2000 as a closer heuristic, and also pretty important for 2020 before it kind of chopped around and consolidated. So that's the broad narrative, is gold will continue ripping as high as it can. I don't know exactly. I mean, I definitely can believe more than 5,000. I can believe more than 6, and potentially as high as 7 or 8 by the full expression of 2029, 2030. I'm still learning this chart, to be honest. I really would base it more off of these pivots for now. That's the highest I could believe for the end of the year at the moment. And that's assuming no significant chop here, just still long, strong vertical. And there are a lot of signs where that is still the case, so no reason to assume otherwise. But how it ties into Bitcoin specifically is the value of gold is going to get pumped up a ton during that time period. And if we are still assuming that we're in the same paradigm for Bitcoin, which you may or may not, you can go watch my 2026 price prediction video if you want to see generally what I think is going to happen over the course of the year. You may believe that we're about to rip higher to new all-time highs. But if we're to assume broadly that the rest of the year is going to be bearish, we're going to find our local lows somewhere between October and December, then that means gold is going to go up that entire time. And then likely what would happen is 2027, I've talked about this in other videos, if there's one narrative that I think they're going to run all year for Bitcoin, it's going to be how low can it go for 2026. And for 2027, the narrative they would run all year is, can it get back above 100K? That's going to become important. And that's only important if we are fighting to get it above it now and keep failing. I think that there, in some ways, we strengthen the argument if we're able to break above 100K in this little dead cat bounce that we're in now until March. I have talked about this a bunch in other videos. I don't think we're going to get above 106.8K in that run. I find that highly unlikely. and then that would cause a major failure. And that would be the last time that we see 100K, I believe, until the second half of 2027. If, again, we're to assume it's going to move in a similar way, which means, again, gold would be continuing to run during that time as Bitcoin is losing value. Bitcoin would recover by the end of 2027. It would recover 100K. And then likely 2028 would be the first time where it could actually flirt with old all-time highs. We don't know if it's going to be pulled ahead towards the halving like it was last time. They may use the halving as a more significant volatility event, and by the rumors, sell the news event than in previous cycles, just because more people are learning about it. But it may also diminish over time, just because the block reward is going to get smaller and smaller relative to the price of Bitcoin itself. So that means the next peak for Bitcoin, again, if we're to assume that it tracks the same way that it has, would be 2029. And what did we say? 2029, 2030 is likely when gold would actually experience its proper peak. If gold, if it's the end of the business cycle with real estate, which still remains to be seen. We won't know until it crosses its moving average. It's really, we have to watch that moving average. If the moving average is able to break, then we can assume all of this goes into play. And if not, then we just kick the can down the road another year or two, essentially. And then it's the same analysis. It just gets extended out further. But if we're to assume it's going to play out kind of like that, where Bitcoin will top in 2029 and gold will peak either in 2029 or 2030, and then gold will start to really, really bleed. That's when we would expect, wherever it is, whether it's all the way up here at 8,000 by then, and that's when it starts to bleed down towards 2,000, that process wouldn't begin until 2030.